Good afternoon, Scott Riley, T3 Live. Welcome to today's recap. So today is September 11th, and once again, hope everyone is having a decent day or as well as they can. I'm sure lots of thoughts of what happened 12 years ago. Lots of thoughts of people that have been missed, whether it was close to you or friends of yours or friends of friends. And one of those days to definitely reflect about things that make you happy because just like that they can get taken away, and you just got to kind of be happy and enjoy life and keep moving on. So it's sometimes hard to talk about the markets and about what we do every day, but that's why you're tuning in. So let me go do it. As far as what's been going on here is we've had about a 7-day rally in the markets that started almost in August before what's it called, Russia intervened in whether or not we were going to have a missile attack, before the taper and the 10-year. Just like at this point, everyone wants to blame the action or put a headline on what is actually going on here. But if you drown out all the noise and look at what's been transpiring, you've had a lot of tradable moves across the board, lots of spots for adjustments. You just have to not have opinions. And if you look here at the chart of the spiders, you will see, here's the trend that's been intact since the November lows. Okay, it was tested right here. Okay, the 100-day. This one was a lot quicker before resuming and continuing. Recently over the summer, we talked about this head and shoulders pattern right here that did show signs to resolve to the downside, and it did. But what happened? We held the 100-day once again. I know this time was 4 or 5 days versus 2 or 3 days, but the same situation happened. The trend held. So with that said, if you were somebody saying, okay, this time is going to be different, with everything that everyone's talking about in September, the scariness of everything that could go on, we're going to break this trend line and we're going to see 1560 to 1580, the June lows. Mr. Alcampora, whoever it is on TV, said we're going to correct 15%. Everyone started putting projections out there. But when that trend line did not break, your thought process had to change, especially considering the action that we were seeing amongst a lot of the momentum names and the leading stocks, which were very constructive. So you go back to that chart and you will see, so right at this point, nobody typically knew what would transpire here. So go back to the chart of the spiders, right here. Okay, because I didn't know either. This spot, I was pretty light also. I'm like, you know what? Who knows what's going to happen here? Maybe this time is different. It wasn't. You're close up here, so you want to look at some spots to make adjustments. This was one of your spots when we recrossed 1640-ish, okay, on the the SPX. That was a spot to maybe cover shorts if you were playing for a trend line break. If you didn't do it here, you remember when we reclaimed the 50-day moving average 3 days ago and we broke above this mini trend line? That was a spot to actually put some risk back on. And if you were short for this potential break to the downside because you were listening to all the fear mongers out there, or even if it made a little bit of sense that it could have happened, that was a spot to take off some of your shorts. And then if you did switch and put risk on, you got paid. If you covered some shorts here, you dealt with less pain. And here we are now hovering above this gap. So with that said, if you look what happened here, if you remember, last time, same situation happened, but it happened quicker. We came in, boom, you had a nice little pivot, quick move. You remember we went sideways right here. I remember they think this was like July 4th weekend. We reclaimed the 50-day, so this was your spot to cover. Okay, this was your spot to put on some risk, and then we gapped up and continued. Some people were hoping for a rest right here, but then that's when Big Ben said he would be accommodative, and then you had a gap up, and then you really had this pain-type choppy trade into new highs. So with that said, I'm not saying it's going to happen here, but the longer we stay above this area, and just think about how many people got caught short, how many people got caught flat-footed, the higher the probability that this will not be a problem. And we've said that the highs of the year are probably not in, especially if we held the 1640 area, which we did. And then if it wasn't going to be this year, it would probably be next year because the economy is getting better. The world economies are getting better. We talked about the strength in China, the double bottom in the FXI, the series of higher lows in that region besides the breaking of the downtrend. So you look real quickly there, very powerful. This is definitely very helpful. So here's your double bottom. There's your higher low, higher low, higher low. Powerful move to the upside. Now it's a little extended from the 8-day. If it could get back down to here, I think you should buy the dip. EWJ also got back on track. Remember this May 22nd high? It had your outside day spot to switch some gears. Here is your major bottom tail that never got violated again. And then, from here, it's been methodically heading back to these highs. Okay, lots of little patterns in here to draw. But anyway, with that being said, Japan's still in the game. But more importantly than all of that, okay, is the charts of the leadership stocks that definitely yawned during that correction. Stocks that held above the 21-day, held above the 50-day, and blasted off when the rally started. And that's why you want to embrace corrections, because if you're in cash and you see things clearly, you could see where the relative strength goes and what's acting best. One of those things obviously was Facebook. Facebook, you look at the chart here, you'll see, nice gap up after earnings. You had your buy area right there, and then you had a minor pullback, and then during August, when the market was pulling in down to the 100-day, which was down here in Facebook, this held the 8-day. And now look at it. And even today on a micro basis, if you didn't come in long Facebook, I actually came in long Facebook, and I'm leaving long Facebook. It did a small red dog reversal here at 43.23, broke below it by like 12, 13 cents. So once it recrossed it, you could have bought it, put a stop at the lows of the day, and then boom, you just made yourself another nice little trade. LinkedIn also acting very well, okay, following the 8-day moving average, lots of buy areas and multiple buy areas. You go into something like a Netflix, it was down today, but it also, you look at the trend that's been going on here to the upside, it's been very, very powerful. Let's go back to some of the sectors. IWM, right back to the highs. This is showing health, the growth, right? Boom, this is 2013 highs right there. Some digestion here would be nice. Another clue not to be short on the brain was the Qs, obviously. Qs broke what's it called to 2013 highs before anything else. And if you want to look at relative strength, look where this held. Look where the Qs held above the actual 50-day. Where you look at the spiders, what did they do? They came to the 100-day. So that means tech was strongest. So with that said, even today, with a little bit of weakness in Apple, or a lot of weakness in Apple, it held in pretty well. You look at Apple today, it is what it is. We had a really nice situation with Apple, for a while. And, I always love when Apple's in play, and so does most people in our community. You had this lower area, you had the double bottom, you had this nice little, gap up. And then the real exciting part was after earnings. Remember, it held the gap, went sideways, and that was a really nice trade right here. And then from there, you had the reclamation, whatever you want to call it, of the 200-day, which was right around here. And then the question was, could it stay pent up? And I would say, thank goodness, okay, it showed its face yesterday and was weak. Because I know a lot of us have been trying to ride this rally for a while with Apple. So think about this. If Apple, did not do this yesterday, and just say if it closed around 510, how many of us would have been long it overnight into, them not getting their deal in China into a 5% gap down? So with that said, some people were upset that they didn't go home short because of this potent down bar, which engulfed all of these levels here, or all of these days. So just think about if it would have closed tight and right up here, how many of us would have got caught in what could have been a pretty, drastic move to the downside. So now, the trade has changed. Carl Icahn speaking today. We'll see what he has to say. Now, again, I think it's obviously off the A list. It was on the A list for the majority of this move. Got a little wishy-washy actually the first time it broke this little area. And now it's just on the B list. Maybe you get a few tight days, and then either we get a nice little trade into the gap for cash flow, or go sideways, doesn't bounce, and as the market continues, and then maybe you get a short below this. But ultimately, this was the area that we talked about that it should get to, pre-market when we drew the Fibonacci retracement levels. And now it's here, and the question is, what's next? And at this point, no one really knows, to be honest. Here's your 466 to 0.32% retracement, which we talked about, which also correlated to this prior breakout. That was a quick trade there today, early morning. I think I traded it once. I traded it from maybe 467 back to 470 and change, and got away from it. But other than that, there wasn't much to do there today. I think we'll see some type of setup, soon in the coming days. No need to be a hero here. No need to say I'm just buying this because every one of my kids is going to have the cheap phone. They're going to get the contract with China Mobile at some point. They're going to come out with an iWatch at some point. But okay, who knows when that is? So at this point, I think you're better off being more tactical than just trying to buy it on the way down. We'll see when something changes. And if Icon says he's averaging down today and it opens up tomorrow, we'll see if there's a trade there. If not, we'll see. Anyway, with that said, no position in Apple. Banks continue to act well. You look at the XLF, they big gap up, held. So right here, some things to do there. If you want to accumulate some banks, looking okay. This is when it broke this descending trend line right here. Okay, so granted, there's room back to the highs here. It's not leading the tape, but something you want to do, or if you wanted to do it. Something like Goldman, big gap up after it woke up right on this day. Remember we talked about it. Boom. Now it's got a gap to trade against, and then at some point highs. Morgan Stanley's actually been the strongest one. This is when you love when corrective action happens. You get excited because they build these descending channels that when they break above, some swing traders will get long versus that, and if you did, boom. And if you waited and maybe waited for this, now it's at highs. Nice looking scenario there. Bank of America, it's struggling a little bit because it's getting taken out of the Dow. So I would say on Friday, if it holds above this with the selling pressure, I think that's going to be a great sign that you will see a move above 15 or so, okay, relatively soon. You can go across the board, and I just try and think about what did Red Dog and Brittany talk about in the morning call in the past, week and a half. Oh, the casinos. Look at that. LVS. We talked about how it was gaining relative strength during the August pullback. Again, look at the sideways action here during August. Okay, where the markets pulled in back to their, to a lower area, and then look at the trigger. Boom. Now it's difficult. I actually tried to be, short a little. I actually went out a little short just to be cute, but it's still no sign. You look because it's kind of parabolic away from the 8 and the 21. But anyway, when it was calculated, look at the move. Remember, win also. We went over right around here. It was a little choppy until it really started to go, but here was that nice, channel, and there you go, and closed pretty well. MGM, we've been talking about for the whole year to just keep it in the drawer. Closed above 19. Really nice trade if you're just sitting in it, and then some trades along the way. Today, some people caught BIIB. Really nice chart pattern. Look at that. Here's the flag type pattern that it triggered above. I think we talked about this in the morning call today. Baidu, something we've been talking about for a few days. Look at that. Power. Boom. Okay, here was your gap up, and then some sideways action here. I got to give it to Chart Girl and Taylor and some of the others. Even Vanessa, they started buying it right around here. Here is your breakout. I'll even throw Carter a shout out. Really nice trade. I think people are growing. They're holding things longer, and this has been a nice 3 to 4 day hold. Really nice move. China markets coming back, so this obviously made some sense. Then what else did they talk about? Okay, or Brittany and myself. Let's think. Ooh. Letter X, letter FCX, right? I think we even had them in some of our products. And look here at X. China getting stronger, materials in play. Look over to X, nice channel. There's your breakout. Held higher right here. Boom, something to do. If, some funds might have been accumulating in here. You don't have to be a fund to do it. You could have bought it right there. Here's your nice little follow through. FCX, same type of scenario. Nice setup, breaking trends here. Boom, there you go. Good job if you got involved in those names. Something that we haven't been talking about for a while because they've been out of play for the majority of the year. Okay, but now they're coming back into play. Why? Because the world is perceived to be getting stronger, so they're going to need some metals and copper and building materials or whatnot. And here you go. Here's FCX. Tesla is kind of wishy-washy right here. Still above the 21 day. Digesting. Not a A+ setup yet. So we'll see what happens. Here is this trend. We'll see what happens if we can get above it in the coming sessions, and then get on people's radar once again. Google just continues. No clear-cut pattern. The only clear-cut pattern here is when it kind of broke this descending channel here. We talked about day one around there, and then now it's just trending. And then just let me just talk about something we discussed. When we say acute trade, that's a counter trend trade. That's when something's extended either which way and you're looking to play some kind of counter trend trade for it to either burn off an overbought condition or burn off an oversold condition and then resume the existing trend. Because this morning, I know a lot of people are like, oh, look at Google, it did a red dog reversal. And it looked like it did. Go back to the chart. Okay, what is a red dog reversal? Let's talk about it. It's after a decent sized move, which Google has seen from about 845 to almost 890, 50 points. Maybe it trades through a prior high, which was 892, okay? Squeezes some shorts, okay? Baits some people in and then reverses, okay? It did that this morning, but then later in the day, strength came back and it closed strong. So with these Q trades, you have to make sure you use stops. Otherwise, the Q trade can make you look real ugly. You go to the 5-minute chart and you could see how it was, could have made your money real quick or lost your money, okay? And here is that 892, okay? So traded through it, squeezed some shorts, baited some people and came back below. All right, so for, it doesn't look like much, but once it came back below 892, some people are like, I might be short versus the highs, and you caught yourself a really quick trade, okay, which went down to 886, so it's still 4 to 5 points for an active trader in Google. It's not so bad. If you're looking for cute cash flow, because that's what you're looking for. And then what happened? Held support, and then went sideways, and pretty much, ignited again. It should never have really got back above this spot, if it was going to be that weak, right? Because, you want to do like retracement rules, okay? So here's your move lower. If it was going to stay weak, it probably should never even really got back above here. Should have rallied and then continued lower. So this negated this move, just showing you that it was just a trade. And then it, it wound up holding higher above this all day before, following through in the end of the day. Kind of the same type of thing happened with LVS. If you look at actively, it did, tried to do a red dog reversal too, where it went out of the gates and then came back in. I actually missed this part of the move. I started shorting it here, okay? And then really to me, I'm like, in order for this to be really weak, it probably should not get much above here, okay? Because, you don't want to see it retrace more than, a third or a half, because if it retraces that much, that means people stepped in and bought it and it's not that weak. So with that said, I put my stop in around 70 cents. So instead of waiting to the highs, I'm like, let me save myself some money, which cost me some money, got out. And then into the end of the day, the market closed in the highs, it closed off the highs, so I'm like, what, let me try it as a cute short, I'll stay with it and see what happens there for a little bit. But overall, when you have a quick move like this, right back down, you have to be prepared for it to make money. Either you take the Q trade or you see if it's valid. If it was valid, it should never really got back above this. It should have continued to the downside, which it didn't. Okay, it wound up going sideways and grinding up for the rest of the day. Some people put on a little GE, okay? At this point, it feels like a lot of, even I'm looking around, I'm like, where could I put on some positions, some long exposure that doesn't have, too much volatility, but if we're going to go make new highs, what else can make new highs? So Sperling put on GE and gap up, continued today. XOM, it's been a real big laggard. It finally, had a clean day today. It's still a laggard, repeating it again, a laggard, but it did poke its face up. We do call this a day one. A day one that's clean, that engulfs a range. So let's see if we get day 2, day 3, which would be nice. Perhaps if it opened up a little weaker and traded through this, you could add for continuation tomorrow. Perhaps it sees this level as an oversold bounce in a very weaker area. CVX is the better one here, where it's already through the moving averages and moving up. So if you're going with the leader laggard, this is that one. So with all that said, for me, I like things when they're calculated, a little methodical. So whenever we're up 7 out of 8 days, you'll see on the virtual trade floor, I start to like clam up a little bit because, I'm pretty risk averse. So I like calculated, nice setups, A+ setups. So when I run out of A+ setups, I start to, just be a little risk averse. And that's cool. That's my style. You look at Sperling, you want action, you'll see he's got about 15 options on, about 15 equity longs, and he's everywhere imaginable because he's got a big time portfolio approach on now that he thinks could continue. So it might, and if he does, he'll get paid, and if we have a few down days, he could absorb that down move. So, God bless. If you could do it with them, go for it. If you can't, pick a few of them that you like. A lot of guys said they did the best day. They came in with nothing. And what made them money? A setup in Baidu, a setup in Facebook, and a setup in BIIB. None of them you had to be long overnight for. You could have just entered it with the plan today. Or you could have been in them, like a lot of people have been in Facebook for a long time, and just added a tier for that setup for extra cash flow and then went back to what you've been sitting in. Just pick which process is for you because there's a lot of good ones out there. The bad ones are opinions. The bad ones are listening to the fear mongers. The bad ones are, not using a plan or not being prepared, but that's, I don't think a lot of people who are watching this video, if you're taking the time to watch it, Hopefully you've been watching it for a while, so you've learned a lot. Hopefully you're a member of the VTF, where you get to see us put on our positions live and take them off. Hopefully you subscribe to Off the Charts, which goes out every night around 8 o'clock with 8 or 9 of our best ideas for action, so you can think about them at night. And then in the morning, you're opted in for the morning note that goes over the futures, where things are at. I write down levels of things that are on my plan, and then you could even get the price point sheet that shows the action area. So there's a lot of different ways to connect all these dots. So with that said, if you're just looking at tweets on Twitter, that's your prerogative also. And if you're part of the community, more extensively, we're happy to have you. And I see a lot more people coming, so it makes me happy that, we're getting out there and it's around the world. Twitter's unbelievable, where you could have friends everywhere. I posted that little picture of the Red Dog Saloon, and all of a sudden 8 people like, oh, I was just there. They're from Alaska. They trade until 12 o'clock or something like that. It's pretty cool. So with that said, just keep making progress, keep making P&L. If you're in a spot that's not conducive to your trading style, don't get frustrated, don't overdo it. Just wait till you have a little bit more clarity. Scott Redler, T3 Live. See you tomorrow morning at the call with Brittany. Have a great night.